Welcome to Illuminati Silver. We tell you the truth about silver. Today is Friday the 10th of July 2020, and on Wednesday we produced a video entitled Gold Sales Past $1,800 and Silver $18.50, where we highlighted that silver would aim for $19 and that if gold holds above $1,800 it will be incredibly bullish, and we could see an advance towards $18.50 very soon. Well, we did see gold peak at $1,818 on Wednesday, and currently at 6:30 GMT plus 1, that's 18:30, 6:30 in the evening, it's just holding on to that $1,800 level. It'd be interesting to see how it closes today. Silver actually went past $19 yesterday, albeit momentarily, and actually touching 1907, but has fallen back since, but is still at a very respectable $18.70 level. Now today we want to talk about the prospect of $2,000 gold. Now before we do that, tomorrow we shall be publishing our weekly update where we will give an overall assessment of what's happened to markets over the past week and what's caused these market movements to occur and what we can look forward to next week. But going back to $2,000 gold. On the February the 9th of this year, we published our 2020 gold price forecast. And we put a link in the description box below if either you cannot remember what it said or alternatively you haven't listened to it. Now at the time, the coronavirus issue was not a crisis, it was an issue, as it was only just being treated seriously. But this is what we put, quote, "The one thing we can say with some degree of certainty is to forget $5,000, $4,000, and even $3,000 gold. However, we would not completely rule out $2,000 gold, especially if the coronavirus is not contained and or if the Iranian situation actually becomes substantially more active and serious." Unquote. And then we added that we expected really, though, this apart, the price to end the year somewhere between $1,650 and $1,750. Well, a number of bullion houses and banks are predicting $1,900 gold this year. And it is difficult for us to argue with that in view of what's currently occurring. And they're also then predicting $2,000 gold during 2021. So let's first of all look at a report published or post published by Reuters just a couple of weeks ago. And then we shall report what's been published today. Reuters article dated June 19th. Headline: Goldman hikes 12-month gold price forecast to $2,000. Goldman Sachs raised its gold price forecast on Friday as it expects a rally in bullion to continue due to currency debasement fears and economic uncertainty caused by the coronavirus crisis. The bank raised its 3, 6 and 12-month gold price estimates to $1,800, $1,900 and $2,000 per ounce from $1,600, $1,650 and $1,800 per ounce, respectively. Policy uncertainty aside, we believe that debasement fears remain the key driver of gold prices in a post-crisis environment such as this, analysts at Goldman Sachs wrote in a note. A weaker dollar will boost the purchasing power of major gold consumers across emerging markets, along with easing of lockdowns, the bank added. Faced with both an unprecedented shock and policy response, it remains unclear how inflationary the economic recovery will be, Goldman said. For gold prices to go materially above $2,000, we believe inflation will need to move above the Federal Reserve's 2% target, and this move to be met with a muted policy response. The US Bank warned that prices are likely to correct in a similar manner to 2013 if inflation doesn't return as the global economy recovers. It added the correction could come when investors start to believe that the Fed will withdraw its monetary policy support. Lower interest rates and widespread stimulus measures tend to boost demand for bullion, which is often seen as a hedge against inflation and currency debasement. Spot gold prices, which were trading around $1,730 an ounce on Friday, have surged nearly 14% this year, boosted by unprecedented central bank stimulus measures as the coronavirus outbreak wrecked economies. The US Bank also raised its 3, 6 and 12-month estimates for silver to $19, $21 and $22 per ounce from $13.5 to $14 and $15 per ounce respectively. Okay, well today this has been further capitalized on, especially as gold has broken that $1,800 level this week and reaching 9-year highs. Now we shall read a Market Watch article followed by a Bloomberg article, both of which are quite brief, but suggest very positive moves for gold and in fact for silver too. Market Watch article dated July 10th, 2020. Headline: Gold at $2,000 is now even more likely, Goldman says. Here's how to trade the commodities recovery. An uneven recovery lies ahead for commodities, but Goldman Sachs analysts are more confident than ever that gold will hit $2,000 an ounce. A scenario in which the US is hit by a second wave of coronavirus cases, while China, the world's largest retail buyer, recovers strongly, is ideal for gold, the investment bank's commodities research team said in a note. The team said it now has even greater conviction in its bullish 12-month target for the precious metal. Gold futures settled at a 9-year high of $1,820.60 per ounce on Wednesday before pulling back slightly. When it comes to other commodities, investors should opt for those less exposed to areas with new coronavirus outbreaks, Europe and Asia, as opposed to the US, and less exposed to disruptions from an outbreak itself, they said. For example, base metals produced in the Americas are more likely to be hit by COVID-related issues. Go long copper, silver and steel and stay long gold was their advice for investors, favouring copper as the most exposed commodity to the investment-driven Chinese recovery. Silver stands to benefit from ongoing demand among investors for safe haven assets as well as the Chinese industrial recovery, they said. When it comes to oil, the strategists opted for Brent crude over US West Texas Intermediate crude. They expected oil prices to rise into 2021, but said WTI would underperform Brent as positioning in US crude remained stretched and a second spike in COVID-19 infections could hit demand. With US storage utilization still high and a landlocked WTI naturally more exposed to much lower prices, this short WTI versus Brent trade remains cheap in our view, they said. Bloomberg article dated July 10th. Headline: Johannesburg gold stocks slay records as virus bolsters bullion. The red-hot rally in gold prices driven by investor concern about the coronavirus pandemic and its impact on the global economy has propelled South African gold stocks to record-slaying highs. A Johannesburg index of producers has surged more than 90% this year, even as the broader South African equities market benchmark remains in the red for 2020. The sector rose another 3.2% to an all-time high on Friday. Gold mining stocks are essentially leveraged plays on the gold price, said Seleho Tsatsi, an analyst at Anchor Capital in Johannesburg. Relatively small moves in the gold price result in big swings in profitability for the gold miners because these businesses have big fixed cost bases. Gold has advanced 19% this year, driving it within reach of the all-time high price of $1,921 an ounce, reached in September 2011. Vast amounts of global stimulus to shield economies from the ravages of COVID-19 have pushed yields below zero and made bullion more attractive. The rand price of gold has risen 44% as the currency weakened against the dollar, improving the profit margins for local producers. Johannesburg's 5 best-performing stocks are all from the sector. Their breakneck ascent has activated at least one warning that the gains may be overdone. The 14-day relative strength index for the gold stocks gauge is at 73, above the level of 70. That suggests to some technical analysts that the securities are overbought. Even so, there should be or could be further upside. Really aggressive central bank action, not just from the US but central banks around the world, following the pandemic this year, is probably the biggest driver of gold prices at the moment, Satsy said. As long as that continues, which appears as if it will in the short term, it should be supportive to gold prices. So, the general consensus is that gold will touch $2,000 within 12 months. We would agree. We're not so confident it will reach that level this year, though. Again, if there is a second wave in the United States of the coronavirus and markets seriously get the jitters, then it could indeed happen. But it is interesting to note at this midpoint of the calendar year, we are in fact only $200 off that mystical $2,000 an ounce goal. Well, we've expressed our opinion. Do please share your thoughts. Meanwhile, thank you so much for listening, and if you haven't already done so, please subscribe to this channel and press the bell sign so that you're notified of our videos as and when they are published. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.